All right, let's jump into the Psychology of Money, Chapter 6 Study Guide. So here we go. Okay. So Housel explains that a small number of events drive the majority of outcomes in finance, business, and even life. Okay. Most things don't matter, but a few tail events that are rare and extreme outcomes determine almost everything. This applies to stock returns, company success, personal financial breakthroughs, all kinds of stuff. Understanding this helps you stay patient through the losses, failures, and stagnation because you only need a few, quote, big wins over a long period of time to make a massive impact. That's very true when it comes to your investment portfolios, right? If you've got 10 companies in there and you got a few that fail, you got some that do okay, you got some that do pretty good, and then you got one that goes absolutely parabolic, most likely your account's looking really good, okay? Even with the ones that lost. All right. How I apply this to prop firms and day trading is the fact that, a small number of events that drive the majority of outcomes when it comes to day trading. I kind of think about that like, blowing up accounts, right? If you look back on your trades and you look back on your journal, if you're not journaling, you need to, and you look back, it's usually a small number of events that completely wrecked your account, right? So if you take that into consideration, that's when you start to work on those things that you need to work on so that way you can become a more consistent trader, right? Like if the small number of events that are killing my account is FOMO or revenge trading or going on full blown tilt and just like, blasting in as many contracts as you can fit because you're like freaking out over the loss that you had in the morning, those are small events, but the impact is absolutely insane. And I think that that's how we can apply this, right? If we understand that if we can get control of those small number of events that drive outcomes, and if the outcome has been that we've been struggling, um, start taking control of that, right? Start managing those small events and get them out of there, and you'll start to see a consistency build. I think a lot of times when people start being consistent is in their mind the consistency is not moving quick enough, so they try to rush it down the road, and that just causes them to be even more impatient. So this is a patience game. It really is. It really is. So all right, let's keep going. So we got key themes here. Most things don't matter. A few things matter hugely. In investing, a tiny percentage of stock produces all long term returns. A few life decisions, marriage, career, and habits can shape the majority of your future. So true. Tails drive the world. A tail event is a rare and extreme outcome like Apple's success or Amazon's success or the dot-com crash or the Bitcoin explosion. These unlikely outliers create the majority of wealth. And it is true. So you must accept a lot of small losses, right? That's why I trade like really a 1 to 3 strategy, right? I risk $100 to make 300 with a win rate like that, right? I'm sorry, with a risk to reward return like that, I can have a pretty low win rate, and I'll end up doing good. I can close 35% in the green, which is, that's pretty low, but I'm profitable at that, right? So that's how I do that, right? How I stay focused on small losses. Um, so things like that. I mean, that's how you do it. It truly is. So the benefit from tails events you must tolerate, right? Many mediocre ideas, so many mediocre trades, right? Many small failures. You got to keep your losses small for real. And then many trades that do nothing. That happens. Like legit, I've gotten in and it just consolidates all day and eventually I might get stopped out, maybe at break even, maybe a little bit of profit, but definitely didn't go to full um, you know, take profits or anything. And then of course the occasional drawdown, right? I did a video where I did a bunch of back testing specifically for the orb, and in that back testing, it showed that there were periods of like drawdown, where it would go $1,800 in drawdown, and that can be hard, right? Like during those couple of weeks that you're doing that, you're like, did my strategy break? Am I doing something wrong? But the most important thing is when you're in that drawdown, you don't add to it. You don't create a small event of revenge trading that cost you an extra $2,000 in drawdown and you blow the account, right? So that's kind of how I apply. I know this book isn't totally about day trading, but that's how I look at, some of the knowledge that's in here, right? I got to be willing to tolerate, drawdowns. I got to be willing to tolerate lots of small failures. And then, when it goes big, it goes big. And when my account hits and I get, several orb trades in a row that are, 3R a piece, all of a sudden I'm up 9R, 12R. And it's like, that's huge. Okay. That's how this works. But it does take patience and persistence. So here we go. Patience and persistence are edge multipliers. You only need to be right occasionally, but you must survive long enough to benefit. Okay. This is definitely geared towards investing, but this knowledge really does apply to day trading. It really does. You need to learn to survive. I think that's the first thing I try to help people do is learn to survive. Learn to trade a mechanical strategy that doesn't destroy their account. And once I can get them to do that, then they can start making small tweaks to the strategy that allows them to become profitable. And we've definitely had people in the community that are currently doing that, and they're doing very well with it. So highly recommend it. Okay. Anything that is huge, profitable, famous, or influential is the result of a tail event. Long tails, the farthest ends of the distribution outcomes, have tremendous influence in finance. Okay, you can be wrong half the time, but still make a fortune, and it's so true, even in day trading. All right, so key takeaway: success is not evenly distributed; it is lopsided. Okay, don't expect every decision to be great. Expect a few to be extraordinary. Okay, so when you're applying this to day trading, the main thing I want you to take away from this is patience, right? Enter your trades and really don't expect any extraordinary, extraordinary trades, something in a prop firm where you just get this 45R trade. It's like, yes, I finally made my year's salary in one trade. Now, that happens to a lot of people who manage their personal accounts. And I've even had times like this in my, personal trading accounts where I enter a trade and it just goes parabolic and I start trailing and I end up holding that thing for months and months and months. And yeah, once in a while there have been some extraordinary returns on trades like that. But when you're trading prop firms, you got to close that sucker at the end of the day. So, when it comes to what I call day trading, I really don't have that. An extraordinary trade for me is something between 5 and 10R, instead of the normal 2 to 3. Okay. So, tolerate boredom, frustration, small losses. The big movements make up for it all. And this is so true, right? Like when I enter a trade and we just range and range and range and we're going from 1R to, halfway to my stop loss to 1R to halfway, and it just ranges. I got to be patient. I just literally got to be patient, sit on my hands. Don't start interjecting, more into the trade. Just allow it to play out and then be okay if it hits my stop loss, and then be okay if it breaks even for the day, and then be okay if it runs to my take profit. Of course, that one's easy to be okay with. But you got to tolerate this stuff, and you really got to prepare yourself to just allow the market to play out, and you're an observer. You're watching what the market's doing, you're watching your trade, and you're just seeing what's going to happen, right? That's really the best attitude to take, is just throw the dice down the table on your trade and allow it to play out, and you just observe what happens. That's really the best attitude that I've ever been able to build, and that has helped many, many, many traders become successful, is just becoming observers of the market. Okay. So avoid quitting early and changing strategies before your tail events arrive. And so when I was back testing the orb, right, the first 3 months of back testing, it was flat. It would go up to $2,000. It would come down, not quite to zero. And then it would go back up to 1,800 and then go not quite to zero. And it just fluctuated. And I'm like, And then all of a sudden for the next 9 months, it took I say a parabolic run. It wasn't a parabolic run, but it slowly climbed really healthy equity curve for 9 months straight. So I was like, dang, most people would have entered that 3 month period and never made it through, you know? And that includes me, like I've had that, where you've gotten into it, you found a new strategy, you're so stoked about it and you try it. How long do you actually sit there and try it? You've got to give it real effort, real time to let it play out to see how it's going to happen. So, are you expecting too much from every trade or idea? That's just enough said. My goodness. All right. Um, so I think this word right here is huge, the expecting word. Just don't expect what it's going to do. Just allow it to play out, observe it, pay attention, journal it. Okay. How can you structure your trading so that a few big winners may make the difference? I think being patient, right? And a lot of people snipe profit too early. They're like, man, I'm at 1.5 R and it's looking like it's going to turn. Let me just take the profit here. And then, yeah, it turns down a little bit. It goes almost back to break even. And then it just runs to the full take profit. And it's like, well, if I had stayed in, I'd have double the profit. I personally think that that is huge, right? I'm not looking for those 10 R's every day. But when you can't hold them long enough to even, like hit full take profits and stuff, that's why you really got to build a trade plan, you know. And you can come in the community, and we can help you with that. We will help you compute your strategy and help you with that for sure. All right. So do you quit or switch strategies before an outlier win shows up? So like I said, I'm not really looking for outlier wins. I understand how this works in investments and stuff. I have some specific investments and I have a couple that I believe are outliers. We'll see if that happens. But I have to be patient, and I've been patient for years, and I'm going to continue being patient for years. But when it comes to my day trading, you really just got to you got to actually trade the strategy long enough to see if it really works or not. I think that's the biggest point here, right? Is a lot of people, they're looking for a golden strategy. And if that sucker doesn't make money immediately, they're like, dump, next video. And then they just keep searching and searching. It's ICT, it's this, it's smart money concepts, it's, EMAs, it's, market cipher, it's cryptovac, it's this, it's that, it's all these special indicators. It's, it's learning to straddle the market and take options and sell puts and buy put, like, it's just like, like they've done so many things that they're good at none of it. And they don't even understand how each of it actually works because they didn't play it out long enough, right? So that's what I recommend. Find a strategy that works with your brain that's kind of easy for you to implement. You break it down as mechanically as possible to a dumb strategy that, may not even be profitable yet. But then you run that mechanically to prove to yourself that you can behaviorally do this and follow mechanical strategy. And then you move from there to slowly adding discretion, stop loss management, take profit management, and all that kind of stuff slowly. All right. If you're struggling doing that, you can do the orb challenge. I have some videos on that. I have a whole YouTube playlist on here. Some of the videos are even very short to respect your time. Watch them, try it out, take the challenge, and watch it flip your trading on your head. I'm telling you. Okay, so practical applications for traders. Obviously, this is very important to what we're doing because we are reading a book about investment, but the knowledge that is in here is completely applicable. So accept that many traders will break even or small losses before the big ones appear. It's very true. Stick with your mechanical orb system long enough to see if the edge plays out. Okay, that's huge. Any system. I mean, I put the orb system in here, but any system, an EMA system that works, anything. You have to stick with it long enough to play it. Like I said, 3 months of back testing, it was flat. It was like make profit, lose profit, make profit, lose profit, make for 3 months. And then 9 months, it was like, it just went vertical. And no, yes, there were still pullbacks and there were still like, weeks of like, red weeks and stuff, of course. But it just went up and it never came back down. Even if you were trading Apex with a trailing drawdown, you would have been fine. There was 1-2 week area you would have came in pretty darn close, but you would have continued. You definitely would have continued. You would have had many opportunities to pull payouts, and it would have been amazing. So, okay. So keep risks small so you can endure the cold streaks that precede the tailwinds. Okay. So a lot of times when you're trading a strategy, you'll end up in a slump, and there's just nothing you can do about it. It's just a strategy, guys. It's the market. It happens, right? And how you react in those cold streaks and those slumps is everything, right? That's what I think about with tail events being on the other side, where it's like my tail event was me, going FOMO because I had a red week and now I'm ticked and I'm mad because I thought I found a good strategy and I need to make that money back. And then I end up over risking and I blow the account. So now I'm not even in the right mindset anymore, right? So, hold on, lost my spot. Here we go. Okay. So, this is huge, right? Okay, here we go. Sorry, took me a second. All right. Like for real. Like that is everything, right? That is what I work with people on. This is what I help people understand is that you need to, like focus on during the cold streaks not blowing everything, right? And those of you who know what I'm talking about, right? And I can put up a little mirror right over here, right over there, and I could look into it and I can talk to myself about this very thing. Okay. I can really count on one hand how many times I, have revenge traded recently. But it has happened. So anyway, all right. I'm trying not to get on like soapboxes and stuff. I'm trying to stay focused, but I really feel like this stuff is so important, right? Because I've worked with a lot of people one on one. I've worked with a lot of communities. I've worked with a lot of groups. I've taught, and I think the biggest thing is I have a failure record like you wouldn't believe. Like my failure record's ugly. Like I think if I was to post my failure record, people would probably be like, never mind, I'll find someone else. But because that failure led into success, and I took the time to figure out how I ended up there, right? And I worked with a ton of mentors around me and people that were very legit pouring into me. That's why I try to, when I come across a point that is everything, right? That I try to take the time to talk about it. So I'm not trying to like rabbit trail, but if you're having struggle like during the cold streaks and you can't handle like a week or two of losses, then that's a problem. That's something you need to focus on, right? That's something you got to work on your mindset. Okay. So celebrate process, not outcome. This is huge. Okay. I'm yet again, I'm gonna step back on the box for a second. If during those week or two that you were red, let's say you lost $1,800, let's say you had an account that was $5,000 in profit and you went down $1,800 and you're sweating it. Okay. But you followed your process. You need to celebrate that. If you didn't lose $1,000 due to revenge trading and you only lost $1,800 due to your strategy, you need to celebrate that. Okay. Like for real. You don't need to like don't celebrate the outcome. Don't just be like, oh, I revenge traded and made an extra $1,000. Woohoo, look at me. No. I would rather you be down $1,800 following your process than up $1,000 because you threw dice down the table and got lucky. Because following your process is going to lead you into behavior that is consistent and will help you be profitable consistently in the future. Throwing dice down the table and getting lucky, okay, is going to create a behavior that is going to be self-destructive and is going to steal from you in the future. Okay, because outcomes are not determined by a few tail trades. There you go. Mini exercise. Excuse me. List your last 30 trades. If you can't, you're probably not journaling the right way. Okay, I need to make a video on journaling. I got a very easy journal. We'll talk about that. Okay, so here we go. 30 trades. Which ones were normal and which ones were outlier winners? Okay, the outlier winners would be the ones you gambled and got lucky. And then I want you to do the outlier losers as well. Which ones did you revenge trade and you got smoked on that shouldn't even be in there, right? And then compare how these would work. All right. A lot of times I have people send me a spreadsheet and they're like, dude, check out my trades. I'm like, cool. I'm like, which one of these are your strategy and which one of these are you revenge trading and getting lucky on and throwing dice? And they're like, I don't know the difference. Okay, add a new column to your data sheet because that's very important. We need to understand your strategy and then we need to understand you. And you need to have two data sheets. One that explains who you are and has your data as a trader. Okay. And then the other is your strategy. And then that way we can work on both individually because I think a lot of people try to do both at the same time. They're like, man, if I just get a good strategy, my mental psychology will be fixed. It's like, no, that's not true. I can hand you a golden strategy that you can win at. And if you don't have the right psychology, you're going to get smoked. Okay. How do I know this? How do I know this? Because I've been handed a golden strategy and I got smoked. Okay. It's so important. All right. So let's go ahead and summarize chapter 6 in one sentence here. In investing and in life, the small number of rare, powerful wins / losses create the majority of your success or failure. So you must stay in the game long enough for those moments to happen. All right. The one thing I want you to take away from this video is find a strategy and stick with it. Trade it for like 3 to 6 months. I even say 3 months, but like I told you, if I gave you the orb back in, I think it was March of 2024, don't quote me, but if I gave it to you then, you would have like flatlined for 3 months and you probably would have given up and moved on. And then the next 9 months, you would have jumped in our Discord and been like, well, why does the orb working for you? Well, we went through the same streak you did. We just continued. Okay. So stick in it long enough. I don't care what strategy it is. Okay. Yes, there are bad strategies out there, but find one that is simple enough that you can implement, that you understand. And if you're lost, go trade the orb challenge that I've created and look at the videos. And, seriously, I wish you the best. Comment down below, share this out to people that'll help them, and join our Discord. We have a whole free section. It's just us chilling. Sometimes we're in there live trading the orb. Sometimes we'll just like hang out and talk about things. So anyways, I'll see you in the next video.